Welcome to Spark Reynolds podcast, Facebook Live. So happy you're all here to join us. Let us know in the chat where you're joining us from and if you have any questions. Last week, Dave Dubois, did I get that right?
You did. You did.
Yes. Talked with Brian about getting creative with sandwich leases, tenant first investing, and more things like that. This week, we are going to do how to measure your return on hassle, active versus passive investing. So with that being said, Brian, talk a little bit about just, time and labor and whatnot. And
Yeah. So, I mean, one of the core challenges here with real estate investing, at least active real estate investing, is that there's a time and labor component to it that you don't have with most types of investments. Most types of investments are totally passive, right? If you invest in a stock or an index fund, an ETF, whatever, you just click a button on your brokerage account and it's done. And you don't have to do anything from there. You just, whenever you feel like selling it, you can sell it. It takes you 30 seconds from start to finish. With real estate investments, or at least active real estate investments, it takes a lot of time and it takes knowledge and skill. And we'll talk about some of those tasks that take time and some of the knowledge and skill that you have to learn, and learning that also takes a lot of time. So you can't compare the returns on, say, a rental property with the returns on a stock, for example, without taking into account the hassle and labor and time required on your part to buy that rental property, right? I mean, let's just say, for example, that you earn 10% on both a stock and on a rental property in the course of a year. The stock took you 30 seconds to buy and manage. The rental property probably took you dozens, if not hundreds of hours between buying it and managing it. So you have to take into account that hassle, that time and energy and effort on your part, because your time is the most valuable asset that you have. You can always make more money. You can't get more time. You have a certain amount of hours remaining in your lifetime, and that gets shorter every hour that goes by, right? And you don't know exactly how many hours, but that is a limited commodity.
Not to mention the aggravation piece. Because
right. And
peace is important, and anything that impounds on that is,
Well, that's an excellent point, that a lot of those hours that you spend managing properties are maybe not like happy hours either, right? Those might be very unhappy hours of labor, as opposed to, maybe doing a side hustle that you love, or, whatever it is. So Denny, talk us through, what are some of the things that you have to do when you buy properties directly, when you actively invest in real estate?
I mean, well, first, just from the very beginning, you have to look for financing. And then once you find financing, you have to get all the paperwork together. And it's usually, a lot. Then you get to the closing and whatnot. Then you have to rent it out. Did I miss
There's
something?
stuff before that even. I mean, finding good deals in general takes a ton of time, right?
Exactly. Yep, that takes a lot of time, actually.
Yeah, good deals are not just lying around the MLS. I mean, investors who consistently earn high returns, they're going out there and finding off-market properties, right? They're driving for dollars. They're sending out direct mail campaigns. They're contacting people in foreclosure. That's a ton of work. The money aside, it takes a ton of work to do that.
Absolutely. So then you finally find the property, you finance it, and you get it. I mean, you may have to fix it up. So you have to deal with contractors or your own time to fix it up.
And contractors, by the way, managing, like hiring, screening, negotiating with contractors, managing them and overseeing their work, one of the most difficult parts of being an active real estate investor. People underestimate that when they get into real estate investing. It's really hard and often miserable dealing with contractors. They can be not the most professional people on the planet, and can really make your life harder as an investor.
I have one quick story. I won't tell the other one, but I was I was managing a like a rehab for a very large apartment complex, kind of in the city, and you have timelines, and you would need one contractor to get done in order for the next contractor to come in. So if one
Right.
contractor doesn't show, then the other ones get messed up too.
Oh, it's a
So,
domino effect. Yeah.
oh my goodness, it was tough. So I learned at a very, very young age, because I was in my 20s, and I learned that you need to not only find good contractors, but you need to communicate, you need to build a rapport with them, the whole 9 yards. And the best way to find a contractor is through other contractors that you trust. I learned that too
Yeah.
at a very young age. So anyway, that's very important, dealing in all this. The next thing is place is done, ready to move into. Now you got to find somebody to move in. So you're advertising. And if you're not using a realtor or a property management company, you're meeting them at the property, you're showing it. That all takes time.
Oh yeah, a lot of time.
And, sometimes you get a talker and something that takes, 20 minutes to go through, you're there for an hour. So, I mean, there's a lot of things. So it could take a lot of time. Then you have to screen them. And, currently in my market, you could get, and it's not unheard of to get 15 to 20 applications anymore on a rental. And that is real fun. So you're going through all of these things, and that's fine. You choose somebody, but then you got to let the other ones know. So then there's that. And then, oh my goodness,
You have to sign a lease agreement. You have to collect deposits. You have to know how to store those security deposits legally in your market, which raises another point of having to learn all the local landlord-tenant laws.
Yep. And you definitely want to do that. And then you think, okay, they're in there. I'll just relax and collect my monthly rent. Nope. There's calls about maintenance issues. Sometimes you can have a pain in the butt somebody who calls for things that aren't really issues.
Light bulb goes out.
Yeah, like you don't know how to change that. And even worse, you can get issues with non-payment of rent, destruction of property, parties, the whole thing. When you're dealing with people, you could be dealing with a wide range of issues. So then you have that. And then if you can't resolve it, you end up going to court.
Yeah, you have to enforce your lease, file evictions, show up in rent court, show up for the actual eviction date. I mean, it's all work.
Yes. And depending on if you're in a city, whole different world. Even just getting to court is a different process. But yeah, like Brian said, and we both have experience, it could take a year. I had somebody in Philadelphia in a house, and it took me 11 months to get them out. And I ended up having to do the cash for keys to get them out.
Yeah. Yeah. And, if you are a landlord long enough, you're going to have plenty of your own nightmare stories about tenants. And yes, you can delegate some of that work to a property manager, but then you have to manage the property manager. You have to double check their work, make sure that they're not nickel and diming you with hidden fees that aren't always showing up. When it comes time to sell a property, you have to market and sell the property. You have to hire a realtor. You have to maybe do some repairs to sell. I mean, it's a lot of work to buy properties directly.
Now I don't want to just poo-poo on the whole thing. There are good things about it too. I mean, I've had good experiences. I've had great residents that lived long term and were no problem. But either way, even with that, there's still time spent.
Yeah, and the bottom line here is that you have to account for that time. You have to take it into account when you're calculating your returns. Your time has a certain dollar value. I mean, every hour of your time is worth a certain amount of money. and not necessarily just what you earn in your job. Your personal time is precious and might be worth more to you than the hourly rate that you happen to earn at your job. So, if you're spending dozens or hundreds of hours a year for each property that you own, that's real money. That's money out of your
Mhm.
pocket. That reduces your real return on that investment compared to a passive investment like a stock or like a passive real estate investment, such as
Mhm.
a REIT or a crowdfunding investment or a real estate syndication. These are all passive investments where you just write a check, you just transfer the money by ACH, you click a button, and it's done. It's like investing in stocks in that sense, where click of a button, it's done. You don't have to do anything else. You don't have to spend those dozens or hundreds of hours a year messing around with the property, hassling with tenants and contractors and local inspectors, pulling permits, all that stuff. You just sit back and enjoy the cash flow. You get the appreciation. You get the tax benefits in many cases, like with real estate syndications. You get cash flow appreciation and full tax benefits without any of the labor or hassle or headaches of being a landlord. So something to
The other
consider.
thing that, not to, push our thing, but with the club that we are involved with, you get to hear and learn from so many others, and just build. It's like a community, so it's like we're all in this together, kind of thing. And I mean, there's something really nice about that too. It's almost like a friendship type thing that you all have something in common. And
Oh, and we are literally in these investments together. I mean, we are literally each putting in small amounts of money in these co-investing club deals in order to meet the larger minimum investment for these big apartment buildings. So each person puts in $5,000, $10,000, whatever they feel like putting in for that investment, instead of having to invest 50 or 100 grand in these large apartment building investments. So we are literally in these investments together and vetting the investments together, screening them together. It is a group effort, to your point, Denny, and it doesn't mean that every investment is perfect, of course, but when you are investing with a group of other investors, chances are you're going to do a better job of evaluating those investments because you're crowdsourcing it to a group of people, right? You
right,
have that many more eyes on each deal. And it just reduces the amount of money you have to put in each investment. When you buy a rental
right.
property, you're looking at a similar like 50 to 100 grand between the down payment, the closing costs, any initial repair costs, cash reserves that you need based on the terms of your loan. If you invest in a real estate syndication by yourself, if you invest in a rental property by yourself, you're probably looking at that 50 to 100 grand range, maybe
Mhm.
25, depending on the property or the syndication. But it's a lot of money in one asset. When you invest in a group investment, like what we do in our co-investing club, it's $5,000 minimum per investment, which not chump change, but it's also not 50 or 100 grand. So, now that's a separate advantage than what we're focusing on today with the hassle and that the return on hassle. Uh, Now there is a time and a place, like you said, Denny, for direct real estate investing, for active real estate investing. In my opinion, and I'm curious to hear your thoughts on this, Denny. To me, the people who should be considering active real estate investments are people who are really handy and really like fixing up properties themselves. Someone who's going to go in, buy a fixer upper, renovate it themselves on their nights and weekends because they like it, right? Because it's like a hobby business for them. That's how they enjoy spending some of their free time. So it's a way for them to earn some money doing something that they already love, right?
Right.
So that's one case where it makes sense. If you have a very specific real estate business model that you are really passionate about, like short-term rentals, like
Mhm.
maybe you want to build a business as a host, like an Airbnb host, and that hospitality business speaks to you. Again, it's like a hobby business, right? It's something that you love, that you're passionate about. Um, or maybe there's something really niche that you love, like the Burr strategy, buy, renovate, rent, refinance, repeat. Um, so in those cases, active real estate investing makes total sense because it's something that you love, that you're passionate about. But if you just want to diversify your portfolio to include real estate, if you just want the cash flow and the appreciation and the tax benefits, there are much easier ways to get that than by active investing in properties. So, okay, that's my 2 cents. Denny, what are your thoughts on that?
No, I totally agree with that. I think there are people that have just a passion for either doing the renovation work or even managing. Like for a very long time, I liked dealing with the people, and I like, even though there were some negatives, I liked doing that. As I got older, I was like, okay, enough is enough. But some of my family and myself, we were even considering purchasing a property on ground up in the mountains because we can enjoy it, and then when we're not there, we can, rent it out
as a short-term
right
rental. Yeah,
exactly. So there are circumstances that work great for it. I would never poo-poo on it completely.
No, of course not. And so you raise a great point there, that one other big advantage to active real estate investing, one other reason to potentially do it or consider it, is control, right? And that's the big distinction between active real estate investing and passive real estate investing. Is when you buy properties directly, you have total control over them. So you can, as you said in your example, go use that property yourself if you feel like it, right? You have control over whether you want to pay the loan off early, or control over exactly when you want to sell it. With passive real estate investments, you don't necessarily have that level of control. So if control is important to you, then it might be investing time in order to get that. Just be aware that your time investment is also an investment alongside your financial investment. You have to account for it when you're looking at your returns and evaluating how you want to invest your money.
Absolutely.
Is there anything that we didn't cover? Is there anything you want to add before we call this episode complete?
I don't think so. But if anybody has any questions about any of this, please reach out to us on our emails. We're pretty good at we're very good actually at answering.
Pretty good. What are you talking about?
It's Denise at sparkrental.com and Brian at sparkrental.com. And also, if you've enjoyed this or any of our other podcasts, please feel free to leave a review. That would be we would be very happy. And
makes a big, it's something it's free and quick for you to do, that makes a big difference to us. So we would very much appreciate that. And on that note, we will catch you guys next week. Have a great week in the meantime. We'll catch you on the flip side.